next guest says that he is still bullish on the infrastructure trade and thinks there's one big hidden AI play. Joining us right now is Steve Eisman. He is senior portfolio manager at Neuberger Berman. And Steve, you're not just bullish about the infrastructure play. You're bullish about the markets writ large at this point, I think.
That's true. I am.
So what do you see that you love, or I guess it's the absence of anything you don't love?
Well, what I would say is that in bad times, people focus on credit quality and balance sheets, and on good times, they focus on stories. And we're in story time. And there are two extremely dominant stories in the markets today, and that's AI and infrastructure. And that's what's driving the economy. And, all the economists who have said that because the Fed's raised rates 500 basis points was going to cause a recession have been wrong. And we're just powering through. And I think the only conclusion you can reach is that the U.S. economy is more dynamic than it's ever been in its history. So what's not to be lucky about or happy about?
That explains the momentum. We keep setting new records every day, it seems like.
Yes, what I would say is, like I had a theory a few months ago that the hidden AI play was Apple. And that seems to become consensus like in the last week. Yeah. So it's no longer.
How did you know that before? Because there were so many questions about Apple and what it was doing. It's suddenly become a lot clearer that they're going to be a distribution
I'm no tech genius, but the only thing that I know is that if AI is going to broaden out beyond just the cloud, people are going to use it on their phone. And so that means Apple. And it means that my phone that I bought a year ago is probably not going to be adequate. It's going to be obsolete. Yeah. So you're going to have the biggest refresh. So look, the next stage in the whole tech story is going to be people are going to buy new phones, they're going to buy new laptops, and that's going to have a tremendous trickle down into the rest of the tech sector.
So right now I have the 15
Me
Pro.
too.
I have the 15 Pro.
Right.
You're good to go, my friend. You actually don't need to upgrade this phone. If you have phones prior to this phone, you have to upgrade.
Yes.
And so the question is, what kind of upgrade cycle you think we're really on? Is this a multi-year upgrade cycle? Is it a finite one, meaning is it 2 or 3 years?
I have no idea. It's impossible to know at this point.
The economics are going to come as a result of the upgrade cycle. It is less clear to me that they're going to come necessarily from services revenue.
Look, we could say whatever we want at this point because it's impossible to know. I think it's going to be both. I think people are going to upgrade. I'll certainly get a new iPad. My iPad's a little low.
Right.
I'll get a new laptop because the last time I bought a laptop was probably 4 years ago. Maybe I'll keep my phone. Maybe I won't. And then there's all the services. It's impossible to say at this point what service is going to do because there aren't any apps yet that you're going to say you're going to pay for the services. So it's all pie in the sky at this point.
If you think Apple is the secret play, but you think it's
not so secret anymore.
Yeah, not so secret. Are you looking downstream? You say that.
We're starting to do research downstream about everybody else that's going to benefit, and I'm not going to tell you what companies those are because I haven't bought them yet. Yeah. But that's what we're working on right now.
Do you hold on to your Apple position? Do you think that this
definitely hold on to your Apple position? It's too central a figure in the whole story that's going to come.
How do you think about a Microsoft?
Oh, we've owned it for years. Same story. Central figure, but it's Microsoft is not going to be. It'll be like Apple in terms of you have to figure out who else is going to benefit from all the stuff that Microsoft is doing, but that has to be a core holding.
And what about Google?
Same.
There
are two groups. There's Microsoft, there's Apple, but then there are the people like Oracle, Google, Meta that have tremendous databases that are going to be used. And then there's going to be all the companies that'll benefit from the broadening out. The big question that I have, and I don't know the answer to this, is there's a thesis out there which I find interesting. I don't know if I completely agree with it yet, that for years software outperformed hardware. And I think there's an argument to be made that if AI is as successful as people think it's going to be, the cost of creating software is going to implode.
Right.
And so that would imply that the moats that some of these software companies have, not all, but some have around their businesses are not going to be quite as high. And so you can make an argument that the revaluation of hardware is going to continue, and that some parts of software will derate. I think it's a kind of an interesting thesis. If it's true, it's a very long-term thesis, so there's plenty of time to figure it out, but it's one of the more interesting things that I've heard in a long time.
All right, guys, this is the part of the video where I'm going to break down the stocks that were mentioned in the CNBC clip. They basically talked about the overall economy and Apple. So we'll start with Apple. Apple is having a massive blow-off top here, breaking past $200 with vengeance. In the last 3 days, we were up as high as 13.5%. Right now, we're sitting around 10% up in 3 days. If this is your first video, the blue line is the 45-day moving average and the green line is the 200-day moving average. So you can see the 45-day moving average is breaking back above the 200-day, which is a very bullish sign, and it's a long-term bullish. If we make every candle 1 week, just look how bullish Apple has looked and been over the last several years. This is one of the stocks where every time it dips, you're going to want to be adding. Every time it gets near this 45-week moving average, every time it's under it, it's been an amazing buying opportunity. We were under it not too long ago. But look at this run we've been on. 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row, just straight to the moon. In the last 8 weeks, we've went from 165 to 220, which is 32% move. Apple is absolutely blasting off, announcing AI and partnering with OpenAI and integrating it in the iPhone and doing everything else they're doing. They're finally catching up. They're finally going to become Apple stock again that just goes up and up and up and is held in just about every single portfolio. If we look at the SPY, we're at all-time highs, guys. We've even gapped up in the last couple days. We've had red days because of the gap. I wouldn't be surprised if we come back just to close the gap, make a little consolidation, and then start going higher. We've been respecting this 45-day moving average. Every time we get below it, it's a very good buying opportunity. Like back here, we were also below it back here in April and May, and then we bounced off of it in June. And ever since then, it rejected going lower sharply and has been breaking out to the upside. So if we do start to break down, watch for it to close the gap. If we go farther than that, watch for about 530. This 200-day moving average is quite a bit of ways, so it wouldn't be that uncommon to get a pullback, but that does not mean that the move is over. Let's go ahead and check out the Qs. Look at it. It's got an even more fierce move straight up. Once this low was put in under the 45-day moving average, guys, we haven't looked back. We came back to literally tap it. We completely rejected going lower right here. We had a V bottom recovery on this day just to come back and touch that 45-day moving average. And look what we've done ever since, at all-time highs, breaking out. Again, same thing with the SPY and Apple. We're well off the 200-day moving average, so a pullback or sideways consolidation will be coming at some point. As always, I hope you guys enjoyed the video and the breakdown. If you did, I need you to smash that like button and subscribe if you haven't already, and I'll see you in the next one.